Wednesday, June 5th, 2024, Monaco 64, home of alternative economics and contrarian views. We're going to look at one of the major topics I cover here on this channel, and that is central banking. And today I'm going to focus on the Bank of England. Recently, there was a member of the House of Lords called Daniel Hannan, Hannan, Lord Hannan, I guess you could call him. And he was once an MEP. He's a Eurosceptic. He's very pro-free market, supposedly conservative. He used to write for the Daily Telegraph, and I remember reading his articles. He is, though, establishment, I would say. But he spoke at the House of Lords in a 5-minute speech, saying that the Bank of England has been a disaster. And he has a YouTube channel, so I'm going to put this video up in the card so you can listen to it. So what do I think about the Bank of England being a disaster? I agree with him, but I would say that the Bank of England has been a disaster from day one, back in 1694. Yes, 330 years it has been around. And why is that? Well, because prior to 1694, the UK, or there wasn't even a UK for that matter, it was England, Wales, Scotland. The United Kingdom only came about a few years later, the Union of the Kingdoms. But prior to 1694, the monarch had to finance and take all the risk of wars and adventures. Couldn't lay the risk, the liability of going to war on the public. And that's what the Bank of England and central banks do, though. They lumber the debts taken to go to war and to do other things onto the public. And is it any wonder that we are now here in the UK into the trillions and trillions of pounds in national debt? And why is that a bad thing? Well, because someone's got to finance that debt. And it's us, the taxpayer. Is it any wonder that taxation is the highest it's been since World War II? And that's the other thing that central banks do. They facilitate the waging of war by the monarch. And one thing I would say, though, that right now there's a lot of talk about war against Russia and even China. And I think it's a big mistake. And why is that? Well, because we are in too much debt already. And we're starting from a position where the public doesn't have the financial wherewithal to support this. It will collapse the whole system. So I just wanted to go through here. I found this on economicshelp.org, and it's a pretty good article, and they don't talk about the fact that the central bank facilitates the creation of the national debt, but indirectly they do. So we've got first a chart here of the national debt as a percentage of GDP, and you can see that during the Napoleonic Wars, there was a lot of debt taken. We had to go off the gold standard, which meant that if you had your gold or money in the bank and you had the banknotes to redeem it for, you couldn't. So there's no gold circulating. So that meant that the governments could issue loans without any backing to finance this war. And that's why the national debt got so high. And even prior to the Napoleonic Wars, the UK was already in a lot of debt, trying to keep its empire going and its colonies going, of course. But notice how after the Napoleonic Wars, that national debt came down as a percentage of GDP. But then they started another war, right? Another 2 wars to get that debt up. It's like a pump and dump through the generations. And the people who benefit are, of course, the people at the top, the very wealthy. The general public, of course, they die in the wars. They suffer in the wars. They break up families, of course. And then they get lumbered with paying for it during peacetime. And it's a scam, in my opinion. And if the king or queen, whoever the monarch is, wants to wage war, that's fine. But they have to finance it themselves. And that's how it used to be before 1694. So just want to go through here the history of UK national debt. It says in 1694, the first UK debt was issued. Well, technically, I guess it was in UK because the Act of Union was a little bit later, but that was transferred onto that new entity, the United Kingdom. And it was during the reign of William III, William and Mary. It was offered for sale by a group of traders and merchants who formed the Bank of England, which acted as a banker for the government. By the end of 1694, the government's national debt was 1.2 million. The government had to pay interest of 8% on the loans as the government's financial situation was considered perilous. Debt rose rapidly to 50 million in 1720 as the government borrowed to finance the War of the Spanish Succession. Napoleonic Wars. The Napoleonic Wars exhausted the British treasury further as they spent on expensive campaigns in Europe. The national debt rose to 1 billion, or 200% of GDP. After the end of the Napoleonic Wars, there was a steady decline in debt to GDP as the Victorian and Edwardian periods prioritized thrift and trying to balance the budget. By 1914, the national debt had fallen to 30% of GDP, and it also fell on a nominal basis. I think the national debt dropped from $1 billion after the Napoleonic Wars to around 500 million, 600 million, something like that. So at least the Victorians and Edwardians try to do the right thing, and they did. There was very little inflation in the 19th century. But now, ever since the First and World War, we haven't seen any thrift, any paying off of the nominal national debt. It's just kept increasing. Yes, they've inflated the economy, and it looks like the debt to GDP has come down, but I think it's a disaster. And the Bank of England has been the enabler of all this. And I saw yesterday someone from the Reform Party, which is, of course, now run by Nigel Farage. He's the leader. It was announced a couple of days ago. He used to be like the honorary president or something. And someone said, oh, now it's... there's no excuse. You have to vote for Nigel Farage. But I was looking at their policies, and they want to eliminate the income tax, but only if you earn up to £20,000, which is almost half the average wage of 35,000 or so. And what about the income tax? What's that all about? Well, it was created because of an emergency, right? The Napoleonic Wars, to pay for the Napoleonic Wars. It was supposed to be temporary, but it hasn't been temporary. And that's all part of the Bank of England scam. And so I agree with Daniel Hannan. The Bank of England has gone on a money printing spree, and they've been able to do that, of course, because this country left the gold standard back in 1931. And why is that important? Well, because if the Bank of England and private commercial banks around it can issue loans not backed by money, i.e. gold, they can just go crazy and do what they've done. And I'm not sure that reforming or giving the power back to the people, like Daniel Hannan says, to regulate the Bank of England will solve anything. I personally would do a few things. I mean, the most drastic one would be to abolish the Bank of England and not allow the monarch or the state to lumber the general public with a national debt. I guess now the current king would probably want to lumber the public in his fight for the climate, right? He made a speech at one of the COP conferences saying that this is like war and we need to spend trillions. Well, how do you think he's going to spend those trillions? He's not going to risk his wealth. He's going to lumber it on you. And that's what the Bank of England does. So, yeah, abolish it, or if it's not possible, and I realize that sometimes in life you have to compromise. The second best thing would be, and Daniel Hannan mentions that, sound money. Yes, going back to sound money, going back to maybe also allowing other banks to compete in issuing banknotes, because in 1844 there was an act of parliament that basically made it illegal for new banks to issue their own banknotes. And then there were also the banks that already issued banknotes were forced to really stop. I think in Scotland some banks still do. But that gave the Bank of England an even bigger stronghold on the economy, on the monetary system. It gave them a monopoly. So, yeah, I think putting the country back on sound money, and that would mean the government being there to mint gold and silver coins or copper coins, and yeah, keep the Bank of England open if you want, but let other banks compete with it, issuing their own currency. But ideally, I think it would be better to abolish the Bank of England altogether. And yeah, if the king or queen, whoever it may be in power, or the state wants to finance wars, they'll have to take their own risk. They won't be able to lumber it on us. So that's how I see it. And the same thing applies to the United States. It applies to, well, virtually every country out there that has everyone has a central bank these days, unfortunately. That's what central banking does. It's this fallacy that the more debt a nation has, the better it is for the economy. I don't think so. And it's always very hard to trust the politicians because they benefit from this. They benefit from all the debt and the largesse, because all it means is that the government is spending more. And they've done the same thing, of course, in the last 4 years with this pandemic, right? And this bogus, this really crazy policy of locking everyone down for almost a year and shutting businesses down. Well, they financed that through the Bank of England. Why wasn't there an outrage back in 2020, 21? And I was talking about this. Couldn't they see that if you shut an economy down, you disrupt everything, and you issue all this debt, and you pump the money into the economy, that you're gonna, in benefits and furlough and all these schemes, that you're gonna create a huge problem, and that's where we are. So yeah, 330 years of disaster. I would say the best thing would be to do away with the Bank of England. And what do you do with their beautiful headquarters at Threadneedle Street? Well, they already have a museum there in the basement. So I would say a very nice five-star hotel would be a good idea for the Bank of England headquarters at Threadneedle Street. But I wouldn't hold my breath. So with that, let's quickly look at where the markets are this morning. And I've been hearing and seeing people talk about on X and other platforms that, yes, there's a lot of credit come due in the economy. Private equity is in trouble. You've got the government in trouble as well. About 10 trillion to issue in new debt, not just to pay the interest, but to roll over maturing debt. You've got credit card debt. You've got commercial real estate debt coming due, and interest rates being at levels that people never thought, a lot of people didn't think would come about maybe in 2021. And that now we're seeing that they're going to revise the jobs data way down, that the economy is falling into a recession. So that's why we're seeing, I think, oil go down. I'm not too sure about what's happening in gold and silver, because the silver price in Shanghai is still like $34. But that's just an anomaly of the paper markets, right? But we've also seen U.S. Treasury yields drop quite a bit. We were around 4 3/4 a month or two ago, and now let's see where we are as I speak here. We're at 4.35. That's despite the fact that many people expect the CPI, or what they call inflation, to remain sticky. So what's going on here? Well, I think investors are saying we've got a problem. The Fed needs to cut rates, and that's what it's all about, I think. But things are a bit shaky in the markets, I would say. So I think that's what's going on. I think the economy is keeling over. And yeah, the markets can smell something. And it's interesting, though, because the Fed meets next week, June 11th and June 12th. So do I think they're going to cut then? No, but we might hear some comments from the FOMC and also from Jay Powell at the press conference to the effect that the economy is slowing down, that the jobs situation, the employment situation is getting worse. And of course, we've got the non-farm payroll data coming out on Friday. So that's what's happening in the markets. Just have a quick look where we are right now. Well, we got spot gold at 23.32 is up $5. High's been 42 in the low 25. Yes, silver has come back below 30. It's at 29.51. It's up 3 cents. The high overnight has been 82 and the low 42. Yeah, of course, we have to go back above 30. But we're still in pretty good territory, technically, I would say. Maybe not in the short term, but in the medium to long term. 29.50 is, yeah, it's a good level. The Dow futures up 75, NASDAQ up 15, and the S&P up 4. Currencies are pretty steady. I guess the dollar is pretty strong here against the yen. It's up 0.2%, approaching 156. What about crude oil? Well, crude oil is stabilized here. It's unchanged. WTI at 73.08. Brent as well, unchanged at 77.40. And even high-grade copper has come off. We got up above 5 recently. Right now we're at 4.53. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.